The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, greetings. We're starting in about a minute or so, and I just thought I would like to get your feedback if the sound is okay and where you're tuning in from. Mike says the sound is good in Ontario. Gil is with us from Toronto. Good to hear from you, Gil. Rod says yep, and Michael says all good from Ottawa. That's great. All right, and Linda from Nanaimo in BC is here, and the sound is good, so that's good to hear. Robert, good in Winnipeg. A-OK in Nova Scotia, says Randy. Christine, good from Toronto. Bruce is all good. Roger from Sherwood Park, and I was just up there for the user group meeting. Great to hear from you again, Roger. Bryce, all good in Calgary. Tamar is all good. I got the thumbs up there. And Peter, sound is good. Frank in Cambridge is good. Dan in Langley, we've got a great cross section all across Canada, looks like, and it's just great to have you all here. Thank you so much for giving us your time tonight. That's really appreciated. So sound is good, looks like, so we'll be starting in just about 30 seconds by my clock anyway. Mario says all is good in Sherbrooke, Quebec. That's great. And Susan from Bon Echo. Mira from Palm Beach, Florida. Awesome. Fayez from Montreal and David from White Rock in BC. Great to have you with us. Stefan from Ottawa. Gosh, we got a great turnout here. That's awesome. Well, listen, it's 6:30 Eastern by my clock, so I think we'll get started. There's still a few people coming into the room, but we've got a great room, and really want to thank you for giving me your valuable time and joining us this evening. My name is Stan Heller. I'm a consultant for VectorVest Canada, and I'm broadcasting from Lethbridge, Alberta. So I do provide a lot of the Canadian content for VectorVest, along with some of our senior instructors from Cornelius, Ohio as well. I definitely intend to make this 30 minutes 60 minutes or so as extremely worthwhile and valuable as possible. The markets have continued to rally today from a pretty steep bottom, so this webinar could not be more timely and important, I think. It's definitely time to put your shopping list of quality retirement stocks together and get ready to buy if you haven't already started stepping in. I know a lot of our regular attendees to our Q&A webinar on Tuesday, I guess that was just yesterday, have said they are already bottom fishing for quality dividend payers, and I'm actually writing my essay. It's written already and submitted about that for Friday. So this is billed as a sneak peek for the new CA-focused investing for retirement course. I'm very excited about it. Spent a lot of time putting it together. Got a lot of great help from Ray Clark, our Vice President of Educational Services, and Dr. DeLito. And rest assured, I'll be going over today some valuable content right from the course that you can start using right away. And if you like what you see and hear today, I hope you'll sign up for the course and enjoy it. It's very comprehensive. 4 weeks on the Mondays and 4 weeks on Thursdays with a mastery session to just reinforce what we've learned on the Monday and go over stock ideas and all that good stuff. Later on, I will have a special bonus offer to tell you about, kind of a fast action bonus, so I hope you can stick with me to the end. And we are recording this webinar. I've pushed the record button, so if all is good, you should have a copy certainly by the end of the day tomorrow. Do encourage questions. I'll try to get through the main presentation before I answer any questions. But do have your questions ready or submit them at any time, and I'll get to them at the end, and we'll make sure we answer them all before we leave today. We plan to go about 45 to 60 minutes, and we'll go longer if there's questions going on. So you can enter your question in this little box right here, and then click on the send button. This should collapse on you during the webcast to give you more screen room, and then you open it again with this little orange arrow that will remain visible. Michael says, is a free bonus a free weekend at your place? Well, if you're coming out to visit, we could find a room, I'm sure. All right, let's move on. So, investing for retirement is the name of the new course and the name of today's webinar. Let's define the 5 biggest retirement fears that most people have. Studies show that people planning for their retirement or living in retirement have these 5 biggest fears. The first one is that they might outlive their money. We certainly know that people are living longer and they are worried that they are going to outlive their money. They worry they won't have enough to live well, never mind doing the extra nice things that they might want to do for themselves and others, such as helping out the children or leaving a legacy for their favorite charities, whatever it might be. So that's a big fear. Unexpected medical and living expenses. I think if you're my age, we're certainly starting to come across this with our parents and so on. And for yourselves, you might want to pay for medical services not covered, and you might want a bit more than basic nursing home care for your loved one or yourself down the road. So that's a big fear. Working because I have to and not because I want to. And that's a big issue. And lots of people do continue on and work because they're now doing something they enjoy in retirement, maybe something completely different from what they did in their working career. But if you have to work to make expenses from day to day, that's a big fear. That's a big fear. And people worry about their income investments not keeping up with inflation. We've all heard that fixed income quite often loses a tremendous amount of ground to inflation. And while it's still important as part of your retirement portfolio for a diversified, well-balanced portfolio, you've got to be careful and not wind up with no defense against inflation. That's a big worry, that inflation runs high and you haven't built your portfolio in a way that gives you a good defense. And then finally, a big fear is about market volatility and investment mistakes. And market volatility, you know, you don't want to be retiring just before the 2008 market crash, but of course you don't know it's coming. And so that kind of volatility, if you're not prepared for it, can really set your retirement plans back. And making investment mistakes and not having a plan to how to handle market downturns and so on is a big fear as well. So we're going to talk about worry-free investing. The Investing for Retirement course does have a good segment on the worry-free investing approach that VectorVest has developed. Why do we do that? Well, it's the safest, surest way to make money in the stock market. Now, this new course that I'm going to describe to you in a few minutes does cover a lot more than worry-free investing. We're going to go through case studies, etc. We're going to talk about stock selection, market timing for every stage of investing for retirement, adjusting for those extreme market conditions and how to do that, how to implement strategies that minimize risk, looking at graph setups, especially geared for the retirement-minded individual, and the best retirement searches that the research manager, Todd Schaefer, and myself have been able to uncover and develop for the Canadians and for the U.S. We'll talk about that in the course for diversification. So there's a lot more to it than worry-free investing, but that will be a big part of it, of course. So there's 3 steps to retire with peace of mind. So I want to walk you through those. These are the key pieces that every retiree should implement, and they make up what we call the worry-free investing. And you can retire with peace of mind. knowing that you can grow your portfolio and generate income and protect your capital if you implement these three steps, these key three principles. When Jim Penna, our retirement manager, asked our clients about how they wanted their life to be different 3 to 5 years from now, one of the most common things he heard was, I just want to be able to relax. I don't want anything too special. I just want a comfortable lifestyle. So what could be holding you back from that right now? In other words, what could be the problems that we're facing, the fears that we have? You know, your portfolio is going nowhere. That's a big problem. You might be doing a lot of work, but you're kind of just spinning your wheels. You get ahead, and then we get into a market correction like we've seen lately, and it just seems like it's a step back, and then you've kind of got to start all over again. And sometimes it can be a deeper hole than when we first started. So that's a big problem that we want to overcome in this investing for retirement course. And you don't always know what to do when things go wrong, and that can be a big problem. And I know that's something that our attendees at our Q&As have identified recently with the correction that we've been in. Oh dear. I won't say who, but someone says, sadly, that is so me. I think that's the part about getting ahead and then falling back. And it happens to us all from time to time, but if we have a good plan, we can avoid that. And it's a problem if you're spending too much time trying to figure it all out. It's that old paralysis by analysis, and you just don't have all the time that you need to make good decisions. So that can be a problem for some people. And you feel if you can't get things fixed, you're not going to have enough money. You know, that first big fear that you're going to run out of money. The income stream is kind of rusted shut here, and you fear you won't be able to turn the tap back on. So that's a big fear. But it doesn't have to be that way. We have an opportunity of changing things. We can grow your portfolio safely and steadily. You know, we can follow a proven process rather than being more aggressive at times and taking risks that we shouldn't be taking. We can kind of take the steady approach, and by steady I mean double-digit returns that are involved with conservative investments. You'll know what to do when the market turns against you. That's the biggest thing. What to do when we get a confirmed down call, or even before you see the market falling. And you want something that doesn't take a lot of time. Otherwise, you just won't do it. You just won't do it. You'll turn it over, you know, to someone else to manage for you, and they don't care about the results and the money as much as you do. So you want to take control, but you want to be armed with good information and a good plan. And at the end of the day, when you retire, you want to be able to relax and do the things that you want to do and live a comfortable life. So that's where we're headed, and that's why we're going to talk about three key principles. These are important planks in our Investing for Retirement program, and I'm sharing them with you tonight, but of course we go into much more detail in the actual course. The first key principle is play it safe. As you move closer to retirement, and especially when you reach retirement, you really want to focus on buying safe stocks, companies with consistent and predictable financial performance, and have a good plan for playing good defense if things do go against you. Our relative safety indicator, I'm sure many of you know, is the perfect indicator for assessing safety, but we have other tools and other principles that we need to implement to deliver more consistent performance. Dr. Toledo, our founder, says a good portfolio management starts with buying the right stocks. And that's certainly true. It's like filling your portfolio with all-stars like the 27 Yankees. That's really the key, and that's where we want to go. Just having those great stocks in your portfolio will help your portfolio grow and do it well over time. So here's how it works. And I'm talking about the worry-free investing component of this course. When we get a confirmed up call, we want to be ready to go all in. This is our buying opportunity. The market is in an established trend, and we want to be ready to buy our stocks. Now, we've seen already this week, and I heard from some of you on Tuesday that some of you have already started tiptoeing in on sort of beaten down, good quality, high relative safety stocks. Nothing wrong with that. But at the very least, when we get the confirmed up call, we want to be ready to go. And we want to buy high relative safety stocks. That's the key. We may not buy the stocks that are at the top of the list sorted by relative safety. There may be some other considerations where we move down a notch, but as long as they have a relative safety well above 1 or at least above 1, we know we've got a good chance to have success with our portfolio. And then when we get to that confirmed down, we want to stop buying stocks. We just don't know how long that confirmed down is going to last. We don't want to be adding positions as the market is moving lower. So why not wait at least for the next confirmed up call, or if you want to come in a little bit earlier, that green light buyer when the market timing indicator, and we'll teach you about that, the different market scenarios at the different stages of retirement, where the market is starting to move up and it's moving up from a bottom, you may decide, just as some people have done this week, to come in a little bit earlier. And then as a firm rule, the line in the sand, you want to be prepared to sell stocks when they get that recommendation sell. And I know what you're all thinking. Yeah, there'll be a time when you get a recommendation sell, and the very next day or 2 days or 3 days later, that's exactly when the stock turns around and starts to go up. And it may go up for a while, but then it may just be a bear flag and it may come back just as quick. So the best policy, what we've learned through our testing, and I'll show you some research on that, in the course, we'll run some studies and case studies, but sell stocks when the recommendation turns to a sell. Yeah, Michael's comment is his rule is the 40-day moving average. If price falls below that, he's already starting to play some defense. And there's nothing wrong with that if that's your rule. With dividend stocks and you're compounding those dividends, you might want to give them a bit more room. The sell rating is such a great indicator because it's based on a 13-week moving average, but it is adjusted for the fundamentals of the stock. So it does allow us a good quality stock to fall a little bit lower. But, you know, depending on your time horizon and where you're at with your retirement, if you're closer to retirement, you don't want to risk a big loss. That 40-day moving average and the RT relative timing is really going to keep you on the right path. Intelligent investment decisions cannot be made without including a knowledge of stock safety. Do not let stock safety be your missing link. That's a direct quote from Dr. Bart DeLito from his classic investment book, The Little Green Book, on page 40, Stock Strategies and Common Sense. So now I want to take a few minutes and dive a little bit deeper into the concept of what high relative safety stocks really are. This is how we define RS, but really what goes into that definition that gives us the higher probability of consistent and predictable financial performance. That's really the key. We do call it our indicator of risk. So when we talk in our course about minimizing risk and strategies for minimizing risk, relative safety is going to be one of the key things that we look at. It's the consistency and predictability of financial performance, and they are the primary factors that we use to assess relative safety. And of course, each of us needs to know how much money we can afford to lose on a single investment. So, relative safety is going to help us with that. It looks at earnings consistency, company size, price behavior, business longevity. You know, a company that's just opened up is a bit more risky, obviously, than a company like CP that's been in business for many, many years, and other companies as well. The banks, for example. We look at dividend history and the debt to equity ratio, the cash flow. There's over 20 different criteria that go into this. These are some of the main ones that factor in. So once you've established your tolerance for risk, now you can focus on assessing the risks involved with the individual stocks, and that's really important for you as well. The difficulty is good information on stock safety is hard to find. VectorVest has made it simpler by having the relative safety indicator. It's on a 0 to 2 scale. It makes it easy to compare one stock to every other stock that you might be considering in the database. It's really, really key. And knowing how safe or risky a stock is can make all the difference between a winning portfolio and that one or two catastrophic losses in positions that just cost your portfolio dearly. So the second key principle is to get paid. So we want to keep up with inflation. You need to have a way to generate consistent, safe income. Okay? Yeah, Michael's comment is, I would rather pay commission over versus losing capital. So he doesn't mind losing a capital, he'll pay that commission. Absolutely. So you want to have a system for getting paid, consistent, as much income as you can generate, especially through dividends, is really the key. But one of the factors that a lot of people forget about is the capital appreciation. Some investors will focus solely on capital appreciation, and it definitely should be part of your growing source of money if you can continue to grow your capital. But if you find yourself constantly drawing down and not replacing your capital with enough base, then eventually you will run out of money. So instead, you need to balance that capital appreciation with a steady source of income, preferably monthly. That doesn't mean you need all monthly dividend payers. It just means you need some staggered quarterly dividend payers to ensure you've got a fairly consistent and regular income. So if you start to collect some nice, safe dividends, you're now starting to generate some additional income. If your companies are growing their dividends every year, the income you can generate will keep you ahead of inflation through the magic of compounding. I was looking at some stocks earlier today for a webinar for new subscribers, and we looked at many, many stocks, good quality, relative safety stocks, and some of them went 2 years, 3 years without getting a sell rating and just growing those dividends. Those are the kinds of stocks we'll be looking for in this course for sure. So dividends and distributions, Dr. Toledo says this is the best of all worlds. Collecting dividend checks while the prices of your stocks go up comes from finding solid growth stocks that pay dividends. And VectorVest is ideally suited to find these babies. That's once again in the little green book. So let's kind of start with the basics of how dividends work and what you as an investor should pay the closest attention to. First of all, there is the annual dividend. You do want a dividend that isn't just a token dividend, it's a meaningful dividend. Some companies will put a dividend out there, but its payout ratio is so far below the norm that it really is a token. So you do want to know what the annual dividend is, and all of this information, by the way, is available in our VectorVest program, and we go into it in much more detail in the course. You want to know the current dividend yield on the annual basis. Dividend safety is exclusive to VectorVest. It's the only service I know that really rates dividend safety on a meaningful scale. This one is on 0 to 99. and we really look for the highest dividend safety that we can get, and that assures to the highest probability that we're going to get paid when the company says we're going to get paid, and we're not going to get stung by a dividend decrease. And we know what happens to share price most often when a company lowers its dividend. The dividend growth rate is important. That's what gives us that annual pay raise and keeps us ahead of inflation. And we do put it all together in a combined indicator called the yield, safety, and growth. And it's a vector formula. And again, it's a way to really analyze and compare dividend stocks one to each other. Murrah says GE just cut its dividend to 1 cent. Yikes. Yeah, and that's been a stock that for many years has been one of the dividend aristocrats, and just really run into hard times, right? Yeah, and the comment is calculations on the dividend payout ratio. Very easy to calculate that in VectorVest as well. So here's Parkland Industries. This is close to home in Alberta. But anyway, here we have a company that it's growing its earnings year over year. You can see that in the chart below. So this is from November, from November 2017. Not quite to current, but close. And it's just growing its earnings on a regular basis. The earnings per share in VectorVest is a forecasted earnings per share. So we like the fact that this is giving us an outlook that earnings is going to continue growing. So that's important. VectorVest rates the dividend as having excellent safety. So there's a dividend yield. Now notice the dividend yield is 1.11%, and that's even after a fairly significant price increase, which has brought that yield down quite a bit. So we'll look forward to the next. Looks like we just got a dividend increase just here within the last couple of weeks. So that yield should go up a little bit. So even after that strong price advance, we've got a pretty decent dividend yield. It's got a really strong dividend safety, 82 on a scale of 0 to 99. And there's that dividend growth rate of about 15%, which is very favorable. And it's got that good combination of yield, safety, and growth, well above 1. And the most impressive thing, I think, is Parkland Industries is a monthly dividend payer. It's in our monthly dividend watch list, or watch list of monthly dividend payers. And you can see then over 5 years, there's been 61 dividend payouts. So these are the kind of companies that we like to build our portfolios on, and we kind of go through that and show you how to do that in our course. The third key principle is to protect your assets. You want a way to protect your portfolio at times when the market shows signs of trouble. We've seen that just recently. We know what that's like. It hasn't been fun for a lot of investors, and it's been a challenge for myself included. I never thought I would be selling a company like Premium Brands, but it got hit with a sell rating and it had to go, and I'm sure others experienced similar situations. But I followed my rules, and that's the main thing. So we've been through some of these challenges recently. So at VectorVest, we really believe protecting your assets is so important. We cover the topic in both Module 3 and Module 4 of the new Investing for Retirement course. So 2 sections to really hone in on protecting your assets, including a section on adjusting for extreme market conditions. So before we get into that though, here's a few basics to help you out, I hope. The Weed Your Portfolio. There's the lesson 2 of the training tab. We go into this in much more detail in the course, and we perform that rank analysis, focusing in on the relative timing indicator. Is it rising? Is it falling? If it's falling, and especially if it falls below 1, that's a second significant warning. That first warning is price falling below the 40-day moving average. We also talk about some other criteria or rules that you can set for yourself to minimize risk. And one of the big ones is never risk more than 1% of your account size in a single trade. So if you have a $100,000 account, the most you should lose on a single trade is $1,000, and you'll need to set your stop price accordingly. In a diversified portfolio with 10 positions, as an example, you should have no more than $10,000 when you start out in any one position. And with a 10% stop loss, the most you could lose would be the $1,000. And that would be within the 1% risk rule. And that's a good example of that. In your watch list and portfolio manager, you can sort by different column indicators. So what you want to do is sort in your watch list and portfolio manager by the RT descending indicator to bring your weakest performers to the bottom of the list. And I know it's been a challenge for me when I first started out with VectorVest to worry most about the stocks that are not doing well. I always wanted to give them time to come back, but really that's where you need to focus your time and not give them time to come back, but be ruthless in adhering to your stop price and give your winners more room to run. Don't be so worried that because it's been going so well for 6 months or a year that the bottom's sure to fall out. We want to give those stocks lots of room to keep going. Okay? So we'll show you techniques for sort of how you can tighten your stops in falling markets, how you can do that in your watch list, but also in your portfolio manager so that you can get alerts. And you might have different stocks that have different stop criteria based on what your rules are, but you might want to tighten it up in a falling market. And VectorVest does make it simple using the portfolio manager and weeding your portfolio using the watch list. Okay, so tighten your stops in a falling market. You want to lock in those profits, and especially if RT is falling. Not so tight that you miss out on dividends and dividend compounding if you've built up a nice profit. What you're wanting to do is avoid a major collapse in your retirement portfolio by letting one or two stocks just get away from you. I don't know if anybody's ever had that happen, but it can happen. So there's that weed your portfolio technique. So here's the example I just mentioned. I held this stock for a long time. You don't want to give it up. It doesn't pay a huge dividend, but it was growing its dividend quite nicely. This is from, looks like September 2015, something like that. And you can see we got an early warning here. Recently, we were in a confirmed up call, but price did fall below the 40-day moving average here in the confirmed up call. And then we got another warning where RT was falling fairly sharply, especially from this high. So it was losing momentum already, but then a fairly sharp decline starting in March and April. Even though the market turned to the upside, we can see that with the green candle. That's the confirmed calls. And then finally, we did get a sell rating right here. Price was about $102, $103, I believe it was, and it was time to let it go. And unfortunately, it has continued to fall. Now, they don't always continue to fall, but our goal with investing for retirement is to avoid that major collapse and not allow a stock to go from $120 up here to just above $80 all the way down here. That's our goal. RT rod is relative timing. It's a very smart indicator based on price movements day over day, week over week, quarter over quarter, and year over year with extra weighting given to the shorter time frame. So it's a very smart, fast indicator showing price trends even before the trends happen. You'll notice price was, or RT was already falling, even as RT was still rising. So that's a divergence that we watch out for. So just to recap what we've learned, we've talked about 3 key principles that we explain in much more detail and with case studies and examples in our course. But the key three key principles are safety first, always a priority when you're getting closer to retirement or even when you're starting out. Young people, they have to play safe too, right? But playing it safe, getting paid, having that income. This is not an options course. We don't go through the options part of it with covered calls and protective puts and that sort of thing. That is a whole other course, but we wanted to spend our time and really focus on what people have told Jim and me, what are the main priorities of what they want to learn about investing for retirement. And that's what we've done with this course. And then finally, ways that you can minimize risk and protect your assets. Those are really key. So we've talked about the 3 key principles. I've given you, I hope, a lot of great information that you can use right away, but you're probably wondering, about this course and what more can I do and how can I get started really on the way to investing for retirement, taking your trading to the next level. It really is a choice that you do have. You can kind of continue on and in sort of a slower mode and a slower learning curve, I guess. So you could continue on the path that you're in, or you can get in the fast lane and grasp the principles and the techniques that we learn in the Investing for Retirement course and join us for this new course. Okay, and without the principles and the tools and the techniques that we've learned today, you can run searches and you can find suitable candidates, but it might take you forever. We've done a lot of the work for you in preparing for this course. So again, it's called Investing for Retirement. We have 4 sessions that begin Monday, November 19th, and continue every Monday until we're done. Every Thursday, we have a mastery session where we recap the Monday information, answer your questions, go through some examples to really hit home the main information, look at lots of stocks. That's the Thursday mastery session that goes with this course. That's something we haven't done in Canada before, but the feedback we get from our U.S. members who have done retirement courses and other courses is that the recap with a mastery session is invaluable. And everything is recorded, so you have access to the recordings for an entire year after the course, which I think is pretty terrific. Here is sort of the layout of the course. You can see we start with a focus on a 4-step process, the stock analysis, the 5 essential qualities of an income stock. We go through the stock viewer and what to look for in analyzing stocks that you're considering for retirement, not just dividend stocks, because capital appreciation is a part of it as well. We look at market timing for each stage of retirement. And then in Module 2, the second Monday, we look at ways to achieve consistent income and growth, building that diversified portfolio, focus a little bit more on the relative safety and the impact of compounding. The Unisearch tool, scanning for safety and growth, will look at some of the best searches that we have in Canada for retirement. And then something that is new is a master retirement watch list. So we'll go through the steps that we've used to create that for you. Succeeding in a worry-free investing program, managing risk, minimizing risk, spreading that risk around, and therefore limiting risk. So we go through those strategies. We look at the best graph setups for retirement investors, identifying trends and momentum, but looking at the longer term picture always. And then we'll use the back tester where we can test your ideas, and the portfolio manager where we forward test your ideas. And then finally, and importantly, implementing your plan and putting it all together My goal with the course is that everyone at the end of the 4 weeks has put together their own unique retirement plan, a trading plan for their own portfolio, how to optimize the portfolio manager. As I mentioned before, adjusting for extreme market conditions, setting up your alerts, tightening up your stops in Portfolio Manager when we have a downtrending market, and then staying informed. Some of the best views, news, and alerts that will keep you informed and on top of your portfolio. Each presentation is designed for about between 60 and 90 minutes. The first one is 90 minutes by my timing, might be a little bit less. Most of them actually are about 90 minutes, I'm sure, once we have the Q&A. So it's 90 minutes of instruction every Monday. And then on the mastery sessions, we go at least 90 minutes, depending on the number of questions that you have. So you're getting a lot of content with this course, no question about it. So it's a 4-session webcast series. Again, everything is recorded. Everything is going to be available to you for 1 year after the course. There are some other perks, I guess, or benefits. You are going to learn to mine the stock viewer for stocks that meet your goals for safety and dividend income. We'll focus on those market conditions that offer the best odds for success. And we'll use the power of VectorVest search engine, the backtester, and portfolio manager to test your ideas and build your diversified portfolio and set up the graphs the best way to analyze a retirement stock and determine precise entries as well as identify signs of weakness. We kind of talked about that tonight. So there are the 4 live modules that will be recorded for you. All times are at 4:30 Eastern, and then again they are recorded. And then we have the 4 mastery support sessions where we help you implement what you've learned, and we look at what you're doing and guide you through. For those of you that are new to VectorVest, and if you could let me know if you are new, not a subscriber, for example, we give you 60 days access to the VectorVest end-of-day service, both Canada and the US if you're new. Okay. And we also give you 60 days access to the auto timer and actually really drill down and show you how to get the most out of the portfolio manager using the auto timer. If you don't already have it, you're going to have it for the length of this course so that you can practice with it, build your portfolio with it, and have it so that you understand it. And if you'd like to continue with it, you would have to call VectorVest and order it. It is a premium add-on module that it does come free with real time. So that's another bonus. And this is what I'm talking about here with this example, looking at stop criteria. You can change your stop criteria in a confirmed down call. You might tighten it up to a 10% trailing stop here with a couple of these positions and let your other ones run as long as they continue to go. So the early bird price for this course is $3.95. This expires November 17th at 10 o'clock Eastern, very precise time. But the regular price is $4.95, and registration only goes until the start of the course, November 19th. After that, it'll be you can register, but it'll be the digital course that you would be registering for. So the regular price is $4.95, but the elite price is $247.50. No matter when you decide to register between now and November 17th, you'll get the $247.50. You do need to call support to get that price. But again, as a bonus, a fast action bonus for spending time with me tonight, the $2.95 price is for a limited time. It's all US dollars, by the way, if I didn't mention that. But $2.95 gets you the complete course, and I just know you're going to find it of tremendous value, especially at that price. I hope everybody jumps in for that price, to be honest with you. It is a limited time. I don't know when they plan to go back to the $3.95 early bird, but the $2.95 is certainly available right away. I hope you decide to do it right away. You can sign up at www.vectorvest.ca/invest, and I will just type that into the chat box here so that you've got it. You can just click on the link. There we go. Thanks, Dave, for your comment. He says, good presentation. He's got a lot of the information already, but I can assure you, Dave, there's just a tremendous amount of new information, new content in this course. We've been working at it for several weeks. It's pretty great. Con, I don't know I can't answer your question, but this is the pricing. It's $2.95 again for fast action. If you can decide quickly that this is something for you, do know that it's a money-back guarantee on the course. You must be satisfied with it. I know some of you may have taken similar courses. If at the end of this one there isn't additional added value, things that you've learned, then you have a money-back guarantee. And I will get to your questions just to show you the calendar. We start pretty quickly here in November 19th. Today's the 7th, so it's just a little ways away. And those are the 4 live modules. And then we have our mastery sessions starting the 22nd of November as well. And that's our contact information for you. So folks, I hope this has been valuable to you and helpful to you just on its own as basically a sneak peek of what is coming up in the full course. But I'd love it if you decided to take this course, take advantage. I'll put the price up there again. Take advantage of this limited time offer. Just know you're going to get a tremendous amount of value. I'll have Jim Penna, our manager of retirement services, helping out with some of these mastery sessions as well, and perhaps a live module as well, he said. So delighted to have you join us for all of that. Yeah, so those, Rick is just commenting, he did take the US version, the Ultimate Retirement course, I believe it was. And if you took that one, just know this is Canadian based, and we will have a little bit on the US side. Of course, the principles are the same, both US and Canada. So there will be some repetition. But Rick, what I would say to you is if you took this course and you weren't completely satisfied that there was enough added value from what you took before, then that money back offer is in place. Okay. And I think that goes for anyone else who mentioned that. Elaine says, very good, Stan. I am in. Thank you for that, Elaine. Mike is in as well. That's awesome. I really appreciate hearing from you that that you're going to be with us. That's really fantastic. Thank you for your comment. Christine says, extremely valuable. We'll be signing up. Just a few weeks ago, took the Successful Investor course and learned so much. Really looking forward to this one. Thank you for that, Christine. Appreciate it. Roger, thank you for that as well. Michael says, what Canadian content versus US? Our case studies will all be Canadian. Our market timing, the stages for retirement, all Canadian. We're definitely going to be focused on the Canadian market, but we don't want to exclude the US. Michael, I'm sure you're aware of this more than anybody, or just as much as anybody for certain. We always talk about diversifying, not just by industry group, not just by stock selection, but also by country as well. You just can't ignore the quality dividend payers that are available in the U.S. And we have reciprocal agreements between the two countries that make investing in U.S. dividend payers very worthwhile. Okay, Michael says, okay, joining because of you despite taking the US version. Michael, we'll make it a great course for you, I know. Awesome. Thank you so much for that. Any other questions? I think I saw one by Ken. Oh my gosh, Ken, did that say the link expire? The link says expires tonight at 8:30. You know, I think that was the initial plan, Ken. And I spoke with Ray Clark, our Vice President of Educational Resources. I'm doing this webinar, essentially the same webinar again tomorrow night. I'm sure it'll be different. I always seem to present it in a different way, but it's essentially the same webinar. And I just didn't want people tomorrow not to have the opportunity for this limited offer, and Ray agreed, and so this offer will continue at least through the webinar tomorrow and Thursday evening. So I don't know after that how long he'll keep it open, but definitely open. If it doesn't come up in your order that way, if you don't decide later tonight before an hour has passed, just call support and let them know that this is what we agreed to. And especially you do need to call support if you want to take advantage of the 495, or sorry, the 247.50. I know many of you, I recognize so many of you, you are elite customers, and this is your price. Cliff says CFX on TSX has a sell rating, but it's still recommended a buy for a couple of Canadian model portfolios. Cliff, that could be the difference in the stop criteria and also the buy criteria. There's a couple of model portfolios that are quite aggressive, I would say. So they would be buying on, one of them I believe buys on the primary wave up, and another one buys on the green light buyer. So yeah, CFX might show up as a buy in that portfolio. Great question though, thank you for that. Dave says, good stuff, Stan. I will be signing up. That's awesome. He says, I want my retirement to be a good one, and I know you will get me there. Thank you for that confidence. We are going to work very hard at that for everyone, of course. All right. Any other questions that I might have missed? Ken is asking, does the back tester include dividends? Ken, it does not. But you can add dividends. I know I do that with my own portfolios. I like to get that income in there. But the back tester will not add the dividends for you. So you have to add them yourself. To add your dividends all at once. Okay, so that's done down here. There's manage your portfolio. You'll notice when I click on manage your portfolio, there's a number of options that come up. Adding the dividends is one option. When you're back testing, I sometimes do cheat a little bit. And I might add a year's worth of dividends all on one date. I'm just interested in the overall return at that point when I'm testing my ideas. Elnor says CFX delivered a special dividend recently. Yes, I did hear about that, Elnor. So he owns the stock, and the dividend was 10% of the stock price. Norboard was another one that had a special dividend recently, $45 a share, I believe it was, or $4.50 a share. And it was a huge dividend anyway. So that does happen. You can't plan for that, but it's nice when it comes your way, isn't it? And if you pick good quality, high relative safety stocks that are really generating good cash flow, sometimes they'll give you that special dividend and make good use of that cash flow. Okay. Sue says, I am in, Stan. It will be a great course, especially with you at the helm. That's awesome. Thank you so much for that. Really appreciate it. See you on the Monday. Tim says, I'm in. That's great. I love to hear from you. If you're if you're coming in with us, that's pretty fantastic. I love the fact that you're letting us know. So thank you for that. Any other questions about the course, about what we talked about, the three principles today? I'm happy to stay as long as you're willing to stay. If you have to run, that's understandable, and that's fine. Gord, thank you for joining us. He says he missed some of the session. Will it be recorded? Yes, I can see that it is being recorded, and if everything works out, you will get a recording of the presentation sometime tomorrow. It won't be tonight, unfortunately. Greg, thank you. He says he's new to VectorVest and looking forward to this course. Thank you, Greg. For a new person with the VectorVest program, you're going to get a tremendous amount of this course. I would say it will give you a fantastic head start to your investing, the VectorVest method. Yeah, Tim says, will I likely have a different approach to my investing for my retirement account versus the other accounts? Yes, I would say you will. For example, you might have a TFSA account where you might take a different approach. You might have a shorter term swing trading account where you're going to take a different approach, shorter term investing. So we won't be going into those types of trading styles. We'll be focusing on the longer term investing, but it'll give you good ideas and confidence for your other accounts as well. No question about it. Okay, yeah, Tim, this is a great time to get started. Tim says he's sort of in that middle age period, not retired yet, and it's a great time to get started with investing for retirement. The earlier you start, obviously, the better it is. There's lots of studies out there that show someone who starts putting away money into good quality dividend payers early in their career and invest for 10 years will outperform someone who starts later and invests a lot more money for a lot longer. That's just a fact. Stacy, you will get the recording tomorrow. Thank you for joining us for this part. Con says on the last slide it said 395 is the early bird, not 295. Yeah, the early bird goes up after this bonus, fast action bonus ends. So right now, Con, the price is 295. That's going to continue for tomorrow through my arrangement with Ray Clark, our Director of Educational, or our Vice President of Educational Services. How long he'll keep it open after that, I don't know. And then it'll go to the 395. So if you're thinking about it at all, you know, I think sometimes we procrastinate, we wait, and then we miss out on something that could have really been a benefit to us, or we decide a little bit later and pay more than we had to pay because we did wait too long. So if you're thinking this is a course that's going to help you, if it's going to guide you in the way that you want for your retirement, I certainly hope you'll consider signing up right away. Take advantage of the 295. Elaine says the sooner the better. He says, I wish I had found VectorVest 15 to 20 years ago. Thank you for that comment, Elaine. Con says he's in. Thank you, Con. And you're keeping us on our toes, by the way. I appreciate it. Daryl says, unfair question, but how big a portfolio do you need to recover? Yeah, you know, it's hard to say. I mean, certainly we're not going after those explosive stocks. So it might take a little bit longer that way, but gosh, I don't know about you, but with the 295 price, that can happen in a day to the upside in an up market off a bottom, as we've seen this week, and it can happen to the downside very quickly and even quicker. You know, the old saying, you take the stairs up and go out the window in the markets sometimes, and that's true. So You don't need a huge size of an account to take advantage of this. If you're someone that's new, and I know you're not, you're asking the question. But if you're starting out with a smaller portfolio, even $5,000 to $10,000, the principles you're going to learn, the types of investments we're going to guide you toward, are going to build your portfolio very well over time. Yeah, and Michael says you can always have multiple portfolios and trade plans to exploit income and growth. Yeah, absolutely. Absolutely, and you may have more than one retirement-minded portfolio. You may be managing a couple of different trading rules and going that way. Thank you, Robert. All signed up. Definitely counting on this. We'll really make it work for you, Robert. Thank you for that. We'll give it our all, as you know. I'm not one to go halfway, so we'll give it our all. Okay, I'm just looking for any other additional questions here. Ronald, the $295 you would pay using your credit card, it is in US dollars, so if you have a US account, that takes some of the sort of the extra fees out of it. But otherwise, you would use your regular card that you might pay for VectorVest, for example. Oh, I see, Daryl. You're talking about pay for the not just the course, but you've got to pay for the subscription as well, and the ongoing subscription for the end of day, which is really an adequate subscription for this kind of a retirement-minded approach. Typically, that would be $645. There is a discount offered, as there is with all of our workshops, and so you would be looking at $595 for an annual subscription if you wanted to continue, or you can pay monthly on that as well. And there's no risk with any of our subscriptions other than an admin fee. If you decide to cancel, you can cancel at any time and get a rebated or probated. What's the word I'm looking for? A refund that is prorated, prorated to your initial payment. Thank you, Michael. Oh dear. Second webinar today. I never do two webinars in a week, so this is new for me. Gord is asking, is there a workbook for the course, one that we can download prior to the start? Yes. All of the slides get put into a comprehensive workbook, and there are a lot of slides with this one. There's just a lot of ground to cover. I didn't leave any stone unturned, to be honest with you, so it'll be a comprehensive workbook that you can download. I might suggest you save it to a folder for retirement rather than print it out, but you might have a page here and there that you would want to print out for sure. Tim is asking, if I can't make the class every Monday at 4:30, can I watch the recordings? Yes, that's absolutely correct. And the nice thing about the recordings is you can pause them, you can rewind them, advance them, and again, you'll have them for an entire 12 months so that if you need a bit of a refresher after a few months, it's easy to go back. Elaine says the only risk is that you will be too happy to see your portfolio grow more than 5% a year. Yeah, 5% a year is the target that a lot of financial advisors are setting for their clients right now. It's my understanding in our current interest rate environment and market environment. I would be very disappointed if you can't do much better than that. Thanks, Gord. Really look forward to seeing you on the course. And Tamar, thank you for that. Let's see, question she's got. Oh, I see the question marks, Tamar, but I don't see the question. Sorry. Leela says, do your slides take into consideration that VectorVest has female population? There's no real images, Leela, male or female, that I can recall. But thanks for your question, because I certainly want to look at that. Absolutely. Absolutely. Thank you for that. What I can say to you, I know in my experience in our household, um, the females are very good investors. They tend to be more rules driven. They stick to the rules better. They tend to be more patient. So I know it's just my daughter, for example. I love her portfolio, and she helped me out one summer about 3 years ago, 4 years ago, and she had the best ideas for creating a portfolio and a search. Con, I wasn't planning to send copies of the slides from today. You will get the recording. Um, I don't know if I can do that or not. I have to check on that. Oh, awesome, Leela. You know, you've heightened my awareness on that issue. Thank you. Appreciate it. Tamar says, for a retirement account, do you just buy and hold or implement shorter time trading? Tamar, that will depend on your rules that you will come up with after we go through the course, hopefully before that last session. You may decide, based on your experience and your risk tolerance, that you're not prepared to sort of experience the downside that we've experienced just recently. So, for example, if I go to the market timing graph, you may decide that when we get a confirmed down call, you're going to start taking risk off the table earlier than someone else. You may decide that you start selling your weakest positions even at this early stage. So that will be entirely up to you. But once we go through some testing and show you the results from our worry-free strategies, the best searches that Todd Schaefer and myself have found in the trading systems, you can start to make your own decisions about what works best for you. Thank you, Leela. Appreciate it. Um, Christine, thank you, and I'll see you in a few weeks, she says. So, yep, definitely. Looking forward to it. I love the content of this course, and I'm really looking forward to hosting it as well. It does look like the questions are drying up, and it looks like a lot of you have made the decision already to join us for the course, and I really want to thank you for that. I look forward to working with you. And I know Jim will be involved as well, Jim Penna, so he'll look forward to working with you. Just once again, that is the link here, www.vectorvest.ca/invest. I did put that in the chat box, so you can go there. Yes, Jim Penna will be involved, Michael, in some of the mastery sessions in particular. Absolutely. And he's given his input and blessing to the content. So that's always good. Got 3 different Michaels on the line here, so I'm going back and forth. Sorry about that. All right, thanks, Daryl. And folks, thank you so much for joining us. Thank you, Linda. Appreciate your comment. She says it was a good presentation. So thank you, everyone, for that. I really appreciate it and look forward to working with those of you that have decided to join us. And for everyone, I wish you safe investing. That's the most important thing. And all the best. All right.